Hey everyone, Charting Man Dan of the Chart Guys. Before we get to the charts, looking at the crypto sector, we have a free PDF on risk management by the wonderful Lamont. So click the link in the bottom of this video in the comments and get that free PDF. Risk management is essential if you want to be a trader for more than just a couple of months. So Bitcoin on the daily time frame is still very strong, and the most notable thing that we're seeing is 15-minute RSI being bought over and over and over again. And we just can't get to hourly oversold as long as that's the case. So we look back at 15-minute oversold and we got 1, 2, this lower wick down there, that got oversold when it was at its low, 3, 4. You can see just how many times in the last week of trading, 15-minute oversold conditions has been the time to buy. And the people that have been waiting for hourly have been frustrated, because the price isn't coming to them. So significant dip buying, which is obviously what the bulls want to see. Not to mention daily, this was a back burner. This was first daily oversold conditions from the bull move of 60 whatever percent. So this is a good sign of what bulls want to see in a strong uptrend. They want to see oversold conditions marking higher lows on longer term time frames. And that Bitcoin daily marked a higher low on the longer term time frame, and the 15-minute oversold conditions keep marking the 4-hour higher lows. Now we do have a potential rising wedge to be keeping an eye on, but we also have to keep in mind when crypto is its strongest, these rising wedges break bullish all the time. So it's worth keeping an eye on. This is essentially bulls have full control, put on our bear glasses to make sure we don't get caught off guard. We're aware that there's a potential 4-hour rising wedge forming, but it doesn't necessarily have a high probability. What would make this have high probability is if we were heading into a key monthly resistance, or if this was a 4-hour rising wedge heading into 25.2 thousand resistance a couple weeks ago. That would have been very notable, but there is no clear resistance. Well, I take that back. There is resistance right now that we are battling, and this resistance is previous support. So let's go back to the weekly time frame here, and we can see the amount of times we bounced here between 28.8 and 30,000. So that's a resistant zone, and you can see just looking back, again, previous support, we held it, and then chopped around right around that level, and now we're back testing it as resistance. So that is a resistance level to be watching, and it's the only resistance that I have nearby. After this zone, we're looking up to 32.4 thousand as the next level. But again, it's just a question of, do we lose the 4-hour uptrend and start daily consolidation, or can the bulls get a convincing move with follow through? Because what we're seeing right now is one candle break into consolidation, one candle break into consolidation. So there is a lack of follow through with the current bull breaks that we've been seeing over the last 24 hours. We have the FOMC on Wednesday. That's really going to dictate the short term here. And we have to keep in mind that right now, fundamentally speaking, we can anticipate that this FOMC reaction is going to be one of the most volatile. And the reason we can say that is because the last FOMC meetings, we had the market pretty sure with knowing what was going to come. And if you look at the probabilities of the FOMC, if you just Google FOMC probability, it'll take you to the website that shows it, and it fluctuates on a daily basis. But it was very high, 80% chance we're going to get this size of a hike, 20% chance we'll get this size. And it's been giving us the most likely scenario all year. But right now we're fluctuating between, 2/3 we're going to get a 25 basis point hike, 1/3 chance we're going to get no hike, then it goes 50-50. The more even the percentage chance of things, the more volatile the reaction, because that means a lot of people are going to be wrong. If 80% chance that something's going to happen and then it happens, most of the people knew what to expect and it was priced in a good bit beforehand. But when it's 50-50, that means half the market could potentially be wrong, and that means that the market has to price in the new information that it wasn't able to accurately anticipate in advance. So that goes in with priced in. What does priced in mean? And we got a whole video on that if you Google chart guys priced in. So bulls are comfortable. And, a lot of bulls are probably just walking their stops up with 4-hour higher lows if they want to protect their gains. And we're going to be looking for first hourly oversold conditions when we lose the 4-hour uptrend, and we'll be looking for a daily higher low. One thing to be watching for as far as correlations, we're keeping an eye on the broader market, we're keeping an eye on the financial sector, but there's a narrative correlation right now. So look at gold on the left here, the daily time frame, and look at Bitcoin on the right. They're very similar. We had this same big bull move up, bull flag continuation, big bull move up, bull flag continuation, and you can see the daily candle today is very similar as well. So it's not a tick for tick correlation. You're not watching gold and Bitcoin next to each other on the 5-minute time frame, but it's a narrative correlation. And again, the narrative is money leaving the banks, red flags at the banks, money going into metals and into Bitcoin. And that's why Bitcoin dominance is so huge recently. It's because money's not going into crypto. I mean, to a certain degree it is, but money's going into Bitcoin over crypto. Over altcoins, I should say. And we'll talk about altcoins here in just a bit. But again, just something to keep an eye on. What's gold doing and how is Bitcoin shaping up in comparison is something that I'd be keeping an eye on. The dominance chart, as I mentioned, is all bull. And I expected to be looking for consolidation of this pattern or of this chart over the weekend. And we have a daily stair-step pattern now with a higher low every day, 10 days in a row. And what we've seen in strong bull markets in the past is Bitcoin makes a move up and then it trades sideways within a range. And while it trades sideways within that range, altcoins then play catch up. And so there was a good opportunity for that this weekend. Bitcoin had an hourly equilibrium. Where was it? Nope, that's not Bitcoin. Bitcoin had an hourly equilibrium over the weekend right here. And so if that were going to happen, this is where altcoins needed to make their move, and they didn't. And so that has kept the dominance chart going extremely strong. And again, it's the narrative. The narrative is playing a large part in who is getting the focus right now, and it is Bitcoin. So dominance chart is still straight up. We're going to watch that daily stair step. And you have to say, right now, altcoins are not positioned well for Bitcoin daily consolidation. Because we know that the likely pattern here is if Bitcoin drops on the daily, it's possible the altcoins don't drop as hard, but we got to anticipate, and it's entirely possible that that does happen and that the dominance chart keeps going up when Bitcoin does see daily consolidation. We've seen that plenty of times. Yes, it's possible that Bitcoin drops harder than altcoins overall, but again, I would be prepared for the possibility that altcoins are going to drop harder than Bitcoin next daily consolidation. And ETH, you look at this ETH daily chart, and this is why looking at the BTC pairings is so important, because someone who is not a more advanced trader is going to look at this and say, all right, Ethereum's going up. I made the right decision being long. And to a certain degree, yeah, whether you were long or short, long is the direction to be looking. But going in Bitcoin over Ethereum would give you a lot more gains. And we can see, daily consolidation is already underway. We had a double top on ETH at the high and then broke some short-term support. So we are technically in a 4-hour downtrend right now. And again, it's ETH BTC. Remember, it's in hindsight at this point, but remember how we were watching this for months, this 2-week pattern. Watch how this breaks. When this breaks, it's going to be very key. It's going to have significant implications. We can anticipate when it breaks, there's going to be notable volatility. And so we now have the break. We had the break days ago, and it's been nothing but follow through. And that break told us, do not look at ETH long over Bitcoin. And yes, it's getting oversold, and yes, this will eventually see a daily bounce. But again, that information is very nice in terms of turning off half our brain. Whenever I'm day trading the stocks, I want to look at the setup of the overall market and say, I want to turn off half my brain. I'm only looking at bearish setups because I'm looking for the hourly lower high on the morning. And then I don't even look long. And that just eliminates things and it makes it much more concise. And so as soon as ETH BTC breaks that 2-week support, you just say, if I'm looking long in crypto, I'm looking long in Bitcoin, not ETH. If I'm looking short in crypto, then I'm looking short on ETH over Bitcoin. And obviously the play over the past couple of weeks has been looking long in Bitcoin over ETH, over altcoins. And there's a lot of altcoins whose BTC pairing charts look like this. LTC BTC was the same thing. Remember the weekly equilibrium. Watch how this breaks. When this pattern breaks, it's going to have significant implications, blah, blah, blah. And we've gotten immense amounts of follow through as Litecoin continues to be way weaker than Bitcoin. Litecoin right now is the weakest it's been compared to Bitcoin in the last 5 months of trading. OMG had a big spike today. I don't know what's going on here. I mean, I read on Twitter news that they were being delisted from Coinbase, but there was a short squeeze where we were up, 50% very quickly. And so bears taking advantage of that as far as trying to confirm a 4-hour downtrend. I mean, obviously the bulls got the win there, but bears now trying to see this pop fade. And key short-term support is 206. Let me know if something's going on with OMG that I'm unaware of, but couldn't find a reason for that big-time move. And it's definitely a more thinly traded coin. I mean, the average 20-day volume, yeah, that's what it is. I mean, on Coinbase, we were trading $1 million a day, which is nothing. And so you see this huge move up. This 4-hour candle, yeah, it's only $2.5 million traded to go up 30%. So it's just a thinly traded coin. And I'm wondering if it was just some big money intentionally squeezing shorts, knowing that people might short on any bearish delisting news. So Litecoin has a nice daily equilibrium. And you can see, again, there's a lot of red out there in altcoins today. Bitcoin is flat and altcoins are dropping. So again, if Bitcoin starts daily consolidation, what's going to happen to these altcoins? More likely than not, they're going to drop harder. So here's Litecoin, nice tightening daily equilibrium. Key support is 75.23. And you can see a lot of names have this setup. OP, Atom, Waves, APT, SHIB, APE, Theta, ADA. So you can just see the tightening daily ranges on all these names. The question over the next few days, can we form a daily high or low and remain within these tightening ranges through the week? But again, FOMC is probably going to lead to a break of these tightening daily ranges. Whether it's a bull break or a bear break, depends on the reaction to the broader market. But tightening ranges to be keeping an eye on. And aggressive bulls are scouting higher lows, but I personally don't love that setup because, again, just the positioning of Bitcoin and the dominance chart. But those daily lower highs, again, if you're looking to hedge, you got a Bitcoin long position. The altcoins, the weaker altcoins are where you want to be looking to hedge. And ideally, the altcoins whose BTC pairings are at fresh lows. I mean, ADA BTC, how long have we been dogging on ADA because the BTC pairing was so weak? The answer has been a long time, and it's remaining that way at this point. So long story short, Bitcoin bulls keeping their control, cautious of a 4-hour rising wedge, but the 4-hour higher lows are our guide. There are definitely bulls watching and waiting for hourly oversold conditions. If we get a drop on the FOMC reaction, be aware that backburner trades have higher risk just because it's a fundamental reaction and not just a natural price action reaction to get to hourly oversold conditions if that's how we get there. Feel free to ask any questions. Check out this free PDF on risk management and do good things. We'll see you soon.